Good morning, my people. Good morning, traders. It has been 2 days without a video. 2 days without a video. However, we are back with another banger. We are back with another video. The analysis for this one, I'm going to be showing you the weekly analysis trades we expect going into the next week tomorrow. So you should be looking out for this trade. I'm going to be straight to the point, showing you these trades, and then you should be watching them going through the next week. Of recent, I wanted to switch my chart. To make it to make my canvas to make it white, because most people are complaining they cannot get this clearly. So I don't know if I changed it to white now how it would look. Guys, that means I'll need to change a lot of things, so I'll just leave it to this color for now. Then the next videos it might change to white, because if I change it now I'll need to do a lot of adjustments in the cover settings. So we are going to continue. And guys, thank you for the subscribers. We are at 500 subscribers. People who have not subscribed, kindly do subscribe. We are on the road now to 600 subscribers, which is a very good thing. So I'll start with I think I'll start with the majors, and then if there's more time we can touch on the rest of the pairs later. So I'll start with the BTC USD. So now BTC, we're going to do a simple analysis, but we shall start from the daily time frame and see what is happening on the daily time frame. So BTC broke this high. It has been going to the upside. However, it reacted from here, creating a place of support and resistance. Now, this is a place of support and resistance. If you look at it, this area and this area, which creates liquidity, people who trade liquidity, and now we have a demand zone to the downside. So this zone is a very good zone because it has liquidity down here, and you see that indeed there is liquidity because price is reacting from this area. Price came, broke this high, came back, reacted from the area, and now there is a place of liquidity down here. So price we expect that in the future, on the daily time frame, price will come, take out this liquidity, react from this area, and then we shall be seeing a move to the upside, which is a very good thing, and it will be a very good move with a lot of pips. You see this area here, this is a place of rally, base, rally, and now there is liquidity here, good move away. So just waiting for the future. However, we are not going to be waiting for the future to trade BTC. We can go now to our daily trading time frame, that is the 4-hour time frame. According to the 4-hour time frame, we have a trend line that has been removed from this area here. I think from this area. Good. So we have a trend line that has been removed from that area, and then we have demand and supply in this area. If I could just shorten this and draw for you a demand and supply area here. You see that area there, very good demand zone. And remember, this is the live market, guys. This is the live market, and price is coming back to this area. So if I were you, I would be looking to trade in this area here. Stop loss is slightly below, and then we target the previous high, which is here. That is a 1:2, clear 1:2. So the trend line has been removed, signifying that we are going to the upside, and also there's a supply zone here that has been removed by that this move here. So we are expecting price to react from this area to go to the upside. This is a live market, guys. Once again, this is a live market, so you should watch out for that move to the upside. Just watch out for that move to the upside. We can even continue to this previous supply zone. However, I'm not favoring price to go higher. I'm favoring price to come and react from this daily demand zone below before it can go even higher. So that is for BTC. You'll be looking out for that zone. If I see even on the 3-hour, same thing, 1 hour, same thing. So this is a great zone to be waiting for price to react from. Guys, if you're not into this trade, you can monitor out this zone. I think price is going to react from this area very well and then go upside before it can retrace back to the downside. So this is BTC, and that is what I'm expecting on the 4-hour time frame. So we just watch out for price to react from this area, give us a 1:2, and then we can be out waiting for price to come to the downside. Okay, so I'll go quickly to another pair, that is gold. So gold, we have two zones. We have two zones that have manifested. The first one is this one here. The first one is this one here. As you can see it there. Then we have another one that has removed the trend line just now. You see this one here. We have our 4-hour trend line there. It has been removed and retested, and gold is looking to the upside, and then there is a clear demand zone here. So now we are caught into two acts. Price can react from here, it's a good 4-hour demand zone, and go to the upside, or price can decide to come and retest the second time the outward trend line, as well as this another 4-hour clean demand zone, which also removes the trend line, and then proceed up. So if I was trading from this area, I would be so cautious. I would risk 0.5% of my position, and immediately price moves out slightly, I'm looking to take out my position or most stop losses above break even so quick, because I believe price will go and price might take out this demand zone to come and react from the one that is below and then go upside. However, since it has broken the trend line, chances are high this one can also work out. So you can just risk small position on this area and then let the rest work out for itself. Also, gold, we are bullish. Gold has been bullish for long. It has been bullish for long. The best case scenario would be if price had come to test this demand zone and go upside, but now that did not happen, and it created here a mini head and shoulder, which also signifies that this demand zone might work out. Okay, so we proceed. Gold, we are looking to buy from here, but with only 0.51% of your position, and then the rest we can look at the bottom here. Okay, so let us proceed to US oil. Now US oil, guys, last week I told you, this week I think on around Monday, I told you US oil has touched the weekly demand zone, and then I told you once it has touched the weekly demand zone, we shall be looking to do what? To buy. However, we are not privy to buys unless this trend line was taken out to prove that indeed we are now starting to go up, and now the trend line was taken out. The trend line was taken out. It was not the best trend line, but it was taken out. Price started making higher highs, higher lows, higher highs, higher lows. Now, I even told you see this line here, I drew it there, I think that day, and then I told you in order for us to start looking for bullish entries on this US oil, it should come and take out this high, which has been effectively taken out with a lot of candles closing to the upside, and has been a good move. So now, judging at this, we should be looking for buys on the 1 hour. So if you go to the 1 hour, you should be looking for buys. However, if you look at the 1 hour, it is already hyper bullish. When you draw the trend line for the 1 hour, it is so steep, and these are not the kind of trend lines we would want. This one simply shows that the market is hyper bullish, so it is not a trend line that you want to rely on. So we had several demand zones. We have this one. We had that 1 hour demand zone. We had another one here. I think this one was used. Yes, this one was used. If I draw it well to the border closure, I don't know. It is a good zone, but now I think it was not used. I had to include these candles, but that would be a very huge zone. So it was a good zone, because remember this was one touch, second touch of the trend line, so this looked like a third touch of the trend line with a demand zone here, very good demand zone, and third touch of the trend line. It would have given us a very good sweet trade, but then it was not used, price just went up. So now we are left with another demand zone here. This one was almost tested immediately. This is the problem with hyper bullish markets. This one was tested immediately. Now you look at here, price went up, leaving here a clean demand zone. So when it created this candle, you marked your zone, and then immediately this candle opened, it was tested. It was tested and price went up. Meaning, what we should be taking as a demand zone, it should be on the 30 minutes, considering this 50% candle here. That is now what we should be taking as our demand. So I think we shall go to the 30 minutes. Guys, these are the kind of demand zones that I don't want, because you just have to anticipate things, which is not a good idea. Now look at the 30 minutes, nothing clear. 45 minutes, we don't have that candle now. 45, we have this one here. See guys, so that means I have to draw the whole of that 45 candle, 45 minutes candle, like that, in order for me to get a zone. And if I don't draw it well, it was tested there. Very useless zone, guys. So we shall be expecting price to come as it is testing this trend line. It will be giving us a trend to the upside for US oil, but for now US oil is looking bullish, especially the weekly demand zone is in play, and also weekly demand zone is in play, and also 1 hour looking bullish, 4 hour looking bullish. So gold, we should only be looking for buys. However, this zone, I don't like such zones, but I know it is going to work out when price comes in, especially that we have this area of liquidity. You have this area of liquidity here, 1 touch, 2 touches, 3 touches. So I expect the third touch we're going to go through, retest this trend line, and then proceed to the upside fall. So US oil going to tomorrow, be watching out of what is expected to happen. So we proceed with another pair, that is now Euro USD. Euro USD, we saw a huge move to the upside, but that move, we all know it was caused by the economics. So if I come to the 4 hour, I see this demand zone was tested on the 4 hour. It was tested, price went to the upside rapidly. This was a good zone, if you might ask me. It was a very, very good zone. So it was a good zone. It was not a very good zone, but it was a good zone. Though the zone was so big, the stop loss would have been, let me see. Wait, this was a daily zone, 200 pips. This is a very, very big zone. 200 pips, the risk to reward of around 1:2, giving you 700 pips. So it's a big zone. But price reacted very well on that daily demand zone and then went up. So now there was a 4 hour, another daily zone here which was not respected. Price is going up. So what we do, we just go to the 4 hour, because those daily big time frames, you get a lot of you don't get, it has a lot of pips, so the pip count is big. That means you're not going to be, there's a zone here, you're not going to have a good tight stop loss. So there's a zone here. This was a 4 hour zone. This was a 4 hour zone. Now I don't know how or why I did not see this zone. I don't know. Anyway, let's proceed. So I feel like when I miss such trends, I don't feel good. So there was a zone here that price reacted from. Price made a rally with 4 basing candles. This is the perfect basing, 4 or less candles, rally, 4 candles, and then price went up very well. Price came back to retest the area, but it barely touched the zone, and then it went up. When it came back, look at the reaction from the area, guys. Look at the reaction from the area. And this is the good thing with supply and demand, you get to get tight stop losses. So this stop loss was around 30 pips, and look at the reaction. It gave you 1:4, 130 pips just in one, that how many, 1, 2, 3 candles. 130 pips. I know this was because of the economics, but still you'd have gotten your profits there. Now we are left with a demand zone down here. So I don't know if we have a supply zone which is concrete that can give us a good reaction. And you see we're getting a reaction from that zone. Good. So we're getting a reaction from that zone, a very good supply zone. So I don't know if this zone is going to give us a proper reaction because we barely touched it and then we are looking down. So if that zone gives us a reaction, we are heading to this demand zone down here. We are heading to this demand zone down here. If that supply zone up gives us a good reaction, this is where we are heading. So now we are looking to touch this zone, then we can sell around 200 pips to here, so we can look for buys. That is what I'm expecting on a Euro USD. So going into next week, we are waiting for price to come and touch this area here. If it touches this area, then we shall be looking for sales. We shall be looking for sales. I don't think this was a signal of a good bullish trend. Why? Because this move here was just because of the economic news that shot it up, and you see immediately it reached around here, it started retracing. But I would want to see price come back and touch this area very well before it can look down to the downside. That is what I'm expecting. When it looks down here, we are selling this up to this area around 200 pips. Let me just count. That around 300 pips to the downside here, 300 pips, guys. So you're going to be targeting risk 45 pips, that is 1:6. So we are going to be targeting this area 300 pips to the downside. So we're just waiting for price to do what? We're just waiting for price to come to that area and give us a signal. Okay, so let us proceed to GBP USD. Time is going, the feed is already 17 minutes. I normally don't want to go above 17 minutes. GBP USD, we have an area here for our area which has removed a trend line, and then we also have a for our demand zone around here. So we have a demand zone there, and then we have another area here. So I would want this area to act as liquidity. Price go through this area and then react from this zone. We go back to the upside. That is what I'm hoping with GBP USD. However, we shall see what will happen. We'll get there. But on GBP USD, I will not be looking for any clear trades. So this one, I will not go about it. So we come to USD JPY. Now, USD JPY, guys, you see what happened last time. I told you there was some form of liquidity down here, so we could come and react from this area and then buy to the upside, targeting the previous high. Exactly, picture perfect. That is what happened. Price broke this structure here, good, making a higher high. So price came and started rotating around this area. We were not interested for buys until it touched the discount zone down, and then immediately bought. Price retraced. What I told you the target was the previous high, which was around 200 pips. Price retraced and then still went ahead to buy for the 200 pips. After it had hit and surpassed a little bit the target, it dropped immediately, and this was news. This was news. So right now on USD JPY, I'm not looking for anything. I'm just looking at trades that are sure. For this one, I'm just leaving it to give me now a proper heads up if I should trade it or not. So let's proceed. Chop. So this is USD CAD. There is nothing significant. This was the supply zone that we expected price to react from. However, it was not respected. Price just went through it without any reaction, making a higher high. So after going through our zone, making a higher high, there's a demand zone below which I'm not willing to trade from. It is kind of rejecting the zone, but this is not a zone I'm willing to trade from. However, USD CAD is bullish. You can look at those trend lines. showing you USD CAD is bullish, and this is looking like the third touch of the trend line in a demand zone. Yes, it is a zone to buy from, because if you can see, there are a lot of confluences. There is support that turns into resistance. Let me show you. Let me just mark this one here. My stop loss would be around 30 pips there, and then the target is here. Not going further, that is 97, around 100 pips, 1:3. So now there is a support that turned into resistance. If you look well here, there is support, broken, turns into resistance. That's why you see my stop loss is put exactly here. I think I will have to stretch it a little bit there, and then there is a demand zone in that area, very good demand zone. So I'm expecting already price is reacting from it, but however I'll be expecting it to give me more confirmation before I can be looking for buys, because this is also a trend line going an upward trend line. This is first touch, this is the second touch, so this is looking like the third touch. If price respect this area, then we shall be going up. So you can be looking for buys, but only risk 1% of your account in this area. There are a lot of confluences that are confirming buys. If I count them, there's a trend line here, one touch, second touch. This is supposed to be the third touch of the trend line. We know what the third touch of the trend line means in price action. That is one confluence. And then there is also support, broken, turns into resistance. This is 1, 2, broken, turns into support, 1, 2, price goes up. That is the second confluence. And also demand zone, very clean rally based rally demand zone in this area. And there was also, that is the third confluence, and there was also this supply zone that was removed, signifying that we are making a higher high. So that is also a confluence, around 5 confluences in that area. So that is a clear zone to buy from to go to the upside. So I'll proceed, guys. The video is long. The video is long. That is now 21 minutes. Let me just touch on USD CHF and then we proceed. So USD CHF, we have a 4-hour demand zone to the downside that I already marked with the stop loss of 50 pips. 4-hour demand zone to the downside. It removed this trend line. However, we have a zone that we bought from, but it did not react very well. This was a rally based rally. Price reacted from this on the first time and bought to the upside. Then it came and reacted from the second. And now, guys, this is what I always tell you. Look at the first reaction. Price reacted with a little bit sniper entry, but it is shot up to the upside, making another high. But now look at the second reaction. Price reacted, went up, came down, went up, came down, went up. Now it has come to break the zone. Why it did not break this high? Why? Because it reacted there in the first time. So meaning many of the orders were taken on the first reaction. So this second reaction are likely not to hold. That's why I told you trading tested zone is not a good idea. So what are we waiting for? We are waiting for price to come and test this area, this demand zone, such that you can take it to the upside. That is for USD CHF. So guys, I would want to end there this video. It is now 23 minutes. It is too long. I'm going to end there this video. If you have not subscribed to the channel, guys, kindly subscribe. Also like the video, like the video and share. That is all, guys. We'll meet in another video. Bye.